Is the stock market going to crash in 2018? So over the past week or so, we've had terrible days in the market. The last 6 days, in fact, have been some of the worst that we've had in the last 2 or 3 years. A lot of people have fears that we're crashing or are going to be entering a bear market. And if you look at the figures here, you can see that the Dow has dropped around 7.62%, the S&P 500 dropped around 7.17%, and the NASDAQ dropped around 6.92%. So let's spend a bit of time to look at this and figure out if we are entering a bear market or if this is just some sort of correction phase that we will reverse out of and continue higher. Let's go. Welcome back guys to another video. My name is Nick. On this channel we focus on positive investing. If you like these kind of videos and want to see more like this, make sure to hit that subscribe button down below. Don't forget to hit that bell notification. Now let's get into the video. Alright, so those initial numbers that I told you about were the 6 days prior to today. So if we take a look at the year-to-date performance, the story is a little bit different. So first off, if we pull up the Dow, you can see here that we're only down around 2.14%. The S&P is down 2.8%. And the NASDAQ is only down 0.42% since the beginning of January. So now when you look at it this way, it's not so bad, right? But going into this week, there are some indicators that are signifying or kind of giving us a hint that we might end up going lower, and these numbers might actually end up being a lot worse than they are right now. So the real question is, how should you prepare? So first off, if you're long term, this little correction or crash or whatever we're having right now should really have no significance on your portfolio because you're looking probably 5, 10, 15, 20 plus years out. And this little correction phase that we're having right now isn't really going to make much of a difference in your portfolio when you look at it that far out. In fact, if you're a long-term investor, it would be probably best to start adding to your position because a lot of companies right now are on discount, even though they are posting strong numbers. So this would be a perfect opportunity to get in there and get some good pricing for a long-term hold. Me personally, I have not added or sold anything in my long-term portfolio. I've just kind of let it be for the last week or two. But now if you're short-term and you do a lot of swing trades and that kind of stuff, then the story kind of changes a little bit, and I'll tell you what I've personally done over the last week or so. So first off, I have sold off most of my positions in my swing trade account, and that's because most of those are options, and options do have an expiry date. So the lower we go in the market, especially with these 1,000 point drops in the Dow, the worse chance that it has to actually get in the money or even close to the money, which means my option prices drop significantly. So instead of holding them through this period of time, even though I am bullish for the long term, I prefer to hold cash in the account because now I can take advantage of those downswings as well. So if you look at the market as a whole, you can see that the buy the dip mentality that's been going on for 2017 or even before that is still kind of present in the market, but not as strong as it was before. If you look at Friday's chart, we had a huge dip around 1:30 or so p.m. on Friday. And you can see that that dip was bought up instantly. People came in, bought that up, and we ended up green on the day by a couple hundred points on the Dow. So you can see that that mentality of, oh, buy the dip, buy it when it's down is still around, even though we are dropping week over week in the market. So my suggestion would be in this market and with these conditions, either hold your portfolio in cash and just kind of sit out, let this all die out, and once we see signs of either going higher or lower, then start making positions, or go in and do some day trading or kind of short-term trading if you have to trade. And that's because you don't want to hold positions in these conditions overnight because we've had swings of 100, 200, 300 points overnight where it's gapped down, and you don't want to be caught in that position where you're losing thousands of dollars potentially. So I would personally just trade it kind of intraday if you have to trade something, and just kind of exit your positions towards the end of the day and kind of hold cash overnight if that's something that you want to do. So what I was watching for in the last week was for the indexes to come down to around their 200-day moving averages. So as you know, I'm very inclined to look at the technical indicators for stocks, indexes, all that kind of stuff, because I do believe that a lot of them respect these movements and these averages over time. And the 200-day moving average is actually a very significant indicator in the market. So if you look at the S&P 500, we did come down and touch that average on Friday. But if you look at the others like the NASDAQ and the Dow Jones, you can see that we're still well above the 200-day moving average, and I think this is kind of the point to watch out for, especially going into this next week. So if I look at some of the popular ETFs that track these indexes, so the Dow Jones is DIA, the S&P 500 is SPY, and the NASDAQ is QQQ, I see some really strong support on the DIA around 220, so I would not be surprised if we end up there over the next week or two. In the Qs, I see support around 145, and in the S&P 500 or the SPY, I see support around 250. So the real question is the market going to continue selling off this week, and are we going to end up with a stock market crash here in 2018, or are we going to start moving higher this week, because we did see signs of strength on Friday? Well, the answer really, like I talked about before, is that no one really knows. There's no one indicator that tells you that the market's going up or down, just like there's no one news article out there or a news or an economic condition that could show you that the market's going up or down. It's usually a factor of multiple things that play a role in this, and over time those things become clear, but in the moment those things are not very clear to decipher. The best thing you can do in these market conditions, like I mentioned before, is hold cash and have a strategy going into every single week. Make sure you stick to that strategy, because you can get burned pretty bad, especially when these swings in the market can go from 1,000 points up to 1,000 points down and all this kind of stuff. So just keep an eye out for that over this next week and over the next few weeks. So like I talked about before, the VIX is still pretty high. We are still roughly, I think, around 30 or so on the VIX, which is very high compared to what we were back in January or even last year, which was maybe around 15 or so. So the markets are very volatile, and that's why we've been seeing a lot of these swings. And I still think there's a lot of selling pressure to come, but I mean, that's just speculation. I can't really go by that. Just have to play it day by day and just see what the market gives us. So looking at other people's perspectives out there on the internet, you can see that a lot of people think that Friday was actually kind of a bull trap. And a bull trap is pretty much where it kind of looks like the market's going up, so a lot of people start buying in and start pushing the prices higher, but then the next day or like over a period of time, we're going to start crashing and crashing hard. So I wouldn't be surprised again if this week we see another 1,000 point drop some point this week. Now, some people on the flip side think that we have kind of bottomed out. We have hit that correction phase, because we did hit around 10% down sometime on Friday when we had that flash crash sometime in the afternoon. So that's the other perspective, really. Like, a lot of people are thinking that we're done with this crazy drop. We're going to start moving up higher, and that's why there was a lot of buying pressure and buyers coming into the market on Friday. So once again, I just want to remind you guys, stay safe out there. Make sure you have a plan when you get in there. And if you're not sure what to do, just stay in cash, sit out, and let this whole thing play out. Either way, guys, thank you so much for watching, and remember to invest positively. Peace.